AMD and Nvidia are two giants in the semiconductor world, but their paths couldn't be more different. While Nvidia dominates the AI accelerator space, AMD is quietly positioning itself as a dark horse in the race. With an expanding addressable market and competitive pricing, AMD's potential is being overlooked by many. In today's episode, we'll uncover why AMD, despite being far from Nvidia's level, is still poised to deliver massive long-term gains. Let's dive in and explore the opportunities investors can't afford to ignore. AMD stock is certainly not the next Nvidia. Year to date, AMD is down roughly 7%, while Nvidia is up by triple digits. Two things can be true. While AMD may not match Nvidia, it's currently sitting at extremely attractive price levels. In today's episode, I'll explain why AMD not being the next Nvidia doesn't equate to a bearish case for investors. Let's take a closer look. I don't believe AMD is the next Nvidia. Nvidia, in my view, will continue to dominate. As I said, these are two very different companies. Over the past 5 years, Nvidia has gained over 2,000%, while AMD has risen a respectable 200%. Both are performing well, but Nvidia is clearly in the lead. The big shift happened with the rise of AI, and understandably so. Let's dive into the bearish cases for AMD because understanding them is essential. Bank of America recently lowered their rating and price target for AMD, citing several weaknesses. The primary bearish argument is that AMD is significantly behind Nvidia, which is likely to maintain its market dominance. Nvidia currently holds about 80% of the AI chip market. The second largest share, around 10 to 15%, is expected to be captured by custom chips from companies like Broadcom and Marvell. This is exciting for me as I've enjoyed stocks like Nvidia in the past due to their data center growth. For example, my investments in Oracle paid off as they grew their AI infrastructure from a small base, outperforming competitors like Google and Amazon year to date. Oracle remains a top performer in the cloud space. Despite some early skepticism about my AI stock picks for 2024, Oracle's success has validated those choices. Marvell is another stock I'm excited about in the custom AI chip space, showing strong performance. My experience in semiconductors gives me confidence in my assessments, and my instincts tell me AMD is a stock worth going heavy on. Bank of America suggests Nvidia will capture 80% of the AI accelerator market, with custom chips taking 10-15% and AMD and startups sharing the remainder. Even with a small market share, AMD has opportunities in its niche. Additionally, AMD's market in consumer PCs faces challenges, leading to a reduction in price targets and revenue estimates for 2025. Still, AMD expects to grow its revenue, supported by the expanding AI market. By 2028, AMD predicts a total addressable market, TAM, of $500 billion for AI, up from $40 billion last year. Even with a small percentage of that TAM, AMD could see significant revenue growth. With a forward PE ratio below 25, AMD looks undervalued compared to Nvidia. Unlike Nvidia, AMD doesn't carry sky-high expectations, which could lead to surprises when the company outperforms. I've compared AMD and Nvidia to two children. Nvidia is the high achiever everyone expects to excel, while AMD is the underdog who occasionally surprises with exceptional results. I believe AMD is positioned to deliver several strong quarters in the future, which could boost its valuation significantly. For this fiscal year, AMD's revenue is expected to reach $25.6 billion, up from $24 billion over the last 12 months. Analysts forecast $32.6 billion for the next fiscal year, a $7 billion increase. Given the market's growth and AMD's performance in areas like AI accelerators, PC market share, and embedded business, I believe AMD can exceed these expectations. While Nvidia is expected to add $70 billion in AI chip revenue next year, AMD is only forecasted to add $7 billion. However, AMD's growth in the AI accelerator market, coupled with gains in other sectors like server CPUs and embedded systems, could drive higher revenues. AMD's products are gaining traction with major players. AMD is also working on innovations to reduce friction for customers transitioning from Nvidia. By improving software ecosystems and offering competitive pricing, AMD is positioning itself as a viable alternative. Additionally, AMD's acquisition of CXL and advancements in networking solutions demonstrate their commitment to long-term growth in AI infrastructure. While AMD is far from Nvidia's level, it doesn't need to be. A strong second-place position can still yield substantial gains. Beyond AI, AMD's opportunities in gaming consoles, embedded markets, and ASIC development are promising. At its current valuation, AMD represents a long-term growth opportunity. That's a wrap for today's video. Just comment, "I stayed until the end," and I'll appreciate it with a heart. Until the next video, stay safe.